Hello, fellow Rebel Capitals. Hope you're well. McDonald's out with earnings today, and it was ugly. It was real ugly. Also, initial claims out today. You guys know from watching my videos, this is something I've been focusing on a lot lately, looking for softness, weakness, or maybe strength in the labor market. So we've got a lot to talk about, that's for sure. Let's first start off by doing the old screen share. Josh is MIA. Who knows? Josh is on Tinder, probably. He's always on Tinder. Okay. Yeah, let's start by going over to CNBC and looking at what on earth is going on with McDonald's. Holy cow. Reports largest U.S. same store sales decline since 2020. And my guess, that's not even adjusted for inflation. But regardless, largest same store decline since 2020. Now, you could be saying, well, Americans are just eating more healthy. Maybe at the higher end, but I don't think you would see, if that was a trend, I don't think you would see just a dramatic drop in one quarter. You would see that play out over time, right? And I can't help but think this is especially, let's just call it the poor middle class, that are just completely and totally tapped out. Let's get into the article here. Key talking points. McDonald's US. Okay, got that. The drop worst in McDonald's home market, United States, since the 8.7% plunge in the second quarter of the cerveza sickness. You know what's funny is I looked at a couple comments, and I've been saying that for so long. A lot of the people that are new to the channel don't know why I say that. And one person thought it was because I was woke, and that was like a woke thing to say. And so they must have been brand new to the channel, like never watched a George Gammon video. Like, oh, this guy's just part of the woke crowd, and he's just using politically correct terminology. Isn't that funny? If you know, you know, or if you're in the know, then you know. Okay, getting back to it here. McDonald's narrowly beat earnings per share, but fell short on revenue, obviously. On Thursday, mixed quarterly results. I wouldn't call that mixed, especially since it's as bad as it has been since the cerveza sickness. There's that woke term again. In the U.S. overall, industry traffic from low-income consumer cohort was down nearly double digits versus the prior year quarter. This is according to CEO of McDonald's, Chris Kempinski. No, I'm not pronouncing that right, but we'll call him Chris. Said this on a conference call. Unlike a few months ago, QSR traffic for middle-income consumers fell nearly as much. QSR. That sounds like a restaurant term, and I am not familiar with it. QSR traffic from middle income. Any of you know what QSR traffic is? Something restaurant? What is QSR? Let me go back to the chat real quick. Any of you in the industry, in the restaurant business, know what QSR traffic is? Oh, quick server restaurant. Ah, got it. Cool. Big shout out to MGTOW by Logic. All right, guys. We appreciate it. So, quick server restaurant. You learn something new every day. You never doubt the collective intelligence of a rebel capitalist live stream. That's for sure. Now, where was I? I can't figure out how to get back to there. I was. Okay, compared. Let's see. So QSR traffic for middle-income consumers fell nearly as much, a clear indication the economy pressures on traffic has broadened. Compared with industry peers, McDonald's has more low middle-income diners, executives said. And even though high income consumers are still dining out, their spending is not enough to offset the shrinking traffic from other income cohorts. Across all of its markets, McDonald's same store sales fell 1% during the quarter, hurt by comparison. Okay, got it. Shares of the company fell, as you would imagine. Now let's get into the details of the report. For its part, McDonald's has already said it plans to lean into value meals. I mean, but it's been doing that. I remember reporting on this like a year, maybe more, that it was trying to. Remember, they were trying to force their franchisees to sell this $5 meal at a loss just so they could have something. Remember, that was a big tiff between the franchisees and the franchisor because they were literally selling these things at a loss. And the franchisor wanted them to continue to do it just to get people in the door and as some sort of PR stunt. Looks like that didn't work out too well. So lean into it. Okay, you're leaning into something that's losing you money. Most major markets, same story, challenging industry environment, softening consumer sentiment. And they get into that a couple times in the article. If this is the same one, I read one earlier this morning, it might have been different. But they're talking about this consumer is stretched, the consumer, the consumer, the consumer. I mean, of course, they threw in the traditional or the mandatory, uncertainty with tariffs, but I cannot see tariff uncertainty really being in the forefront of the mind of the typical McDonald's consumer. I'm not sure that that's their main point of focus when they're going into McDonald's to get the value meal or the buzzy menu item. Wow, that sounds good. So I think this is just really, I mean, you've got, again, two ways to look at this. Well, Americans are eating more healthy, or this is just another one of those red flags. And we look at this in the context of the GDP number being negative yesterday. And there's a lot of nuance there, like I said, but you've got to look at the totality of the data we have, and it's pointing toward an economic slowdown. Whether that's a recession or not, who knows? We'll have to wait to see how this plays out. That's how these cycles usually play out. We know that by looking at history. But is this time different? I don't know. But so far, it's following, I mean, literally the exact same cycle. Is this one a little more stretched? Yeah, I mean, maybe. You go back and look at the GFC, and that was 2 years from when the curve inverted to when you officially had a recession. And let's just assume for a moment that we had the recession that's going to start in January or January 2025, right? Because the NBER comes out late, says, "Oh yeah, by the way, we're in recession then." And then you say, "Well, George, but the unemployment numbers and the GDP, yeah, they always revise that. They did that in 2008 too. So in real time, everything looks hunky dory. But then once they revise everything in December, the everything just plummets. And so you got to take the real time data to a certain degree with a grain of salt, especially when you're in one of these potential downturns. So this is just more kind of, unfortunately, negative data points about the US economy, which for me just increases the probabilities. Again, no certainty, it's only probabilities, but increases the probabilities that the US, even right now, is in an economic slowdown. And to be clear, I'm not blaming this entirely on Trump. Do these tariffs have a lot to do with it? Sure. Is that really the core underlying issue? Absolutely not. Absolutely not. Because look at the earnings. I mean, they started to decline in January. And same thing with the airlines, right? They just started to fall off a cliff, demand in January. This was long before, probably before Trump even took office. So, and then while I'm going through this, I didn't know this was going to happen today, but Airbnb, let's go over there. This just came out as we were doing the live stream. It says Airbnb issues disappointing revenue guidance for that doesn't surprise me at all. Just some anecdotal evidence down here in Medellin. For those of you who have been here, you know what I'm talking about. Tons and tons and tons of tourists from the United States. And the tourism, I mean, I first started coming here 10 years ago, and there were, you'd see a couple backpackers here and there. But that was it. I mean, now it has exploded, the tourism. And one of the big industries, let's say, here is not just real estate, but it's these Airbnb rentals, huge Airbnb market. And one of my good friends, in fact, a lot of my good friends have Airbnb rentals, but the one friend in particular, Angie, who is my designer with Joaquin, husband and wife team there, they have been working for me since 2014. And Angie runs a property management company where she has about 150 doors, and they're all Airbnb. And so I was just talking to her last weekend, and she was telling me how demand, it hasn't completely just dropped off a cliff, but she said it's definitely slowing. And they're starting to reduce the prices for the Airbnbs, offer specials to try to get people in the front door. So that's down here in Medellin, and that's a lot of tourism from just, all of the United States, but a large percentage from the East Coast, from Miami all the way up to New York. So Airbnb issues disappointing revenue guidance for second quarter. Airbnb posted first quarter earnings after the bell Thursday today. It's down 2.8% after hours. And let's see here. Earnings, okay, details are fine here, but let's get into their comments. In the U.S., we've seen relatively softer results, which we believe largely driven by broader economic uncertainties. I mean, tariffs, they're blaming this on tariffs? Come on. I mean, look, how many of your friends or your family members that were traveling last quarter were like, oh, hey, I've got a great idea. Let's book an Airbnb. Oh, that'll be fun. Yeah, we're all going to Miami this weekend. It's going to be a blast. We're going to hang out with Jill and Dan down there. And then they're like, oh, but wait, that's right. The tariffs are coming. Boy, we got to put the kibosh on that idea. I guess, no, forget Airbnb. No way, no way. Now, no one's saying that, right? Airbnb, if there's one thing that is not directly impacted by tariffs, it's going to be Airbnb, for heaven's sakes. Is there anything that's more domestic than Airbnb? Come on. Come on. This is, it's like Clinton. It's all about the economy, stupid. It's all about the economy. All right. Booking, blah, blah, blah. During April, we saw strong demand for Easter travel from Latin America, which remains our fastest growing region. Yeah, not anymore. It might be your fastest. You know what I'd like to see, though? It might be their fastest growing region, but I'd like to see a same store sales. I highly doubt, I doubt they could even calculate that. But, so the reason I say that is because let's just say that McDonald's has 10 stores. And then during the quarter, they expand to 20 stores. And they say, oh, well, look, our earnings went up by 50%. Oh, isn't that great? Not really, because you expanded your stores by 100%. So the fact that your revenue didn't go up by 100%, that's actually bad. That shows an overall decline, same store sales. So I'd be very curious to see what, I don't know what the same metric would be, like the same door sales. but I'm guessing it's not up. It would be down substantially based on the anecdotal evidence I have here in Medellin.
I saw the same thing when I was in Miami, George.
Oh, what'd you say, Josh?
I was there for the big YPO event with Ken,
Yeah.
and we went out to like some nice restaurant, but we were the only ones there. And then
Really?
yeah, and we looked off, and you could see Brickell, which is like supposed to be the nicest area in Miami, and all those super skyscrapers.
Yeah.
We were looking at the Porsche building, and there was no lights on in any of the buildings or any of like the stories. And so
Yeah.
all these big skyscrapers, they're either everyone's gone or no one's paying rent or there's just no one living there.
It's a combination of both. I mean, a lot of those are going to be just investment properties from people in South America just trying to park money.
Mm-hmm.
But a lot of them are going to be Airbnbs, and a lot of them are going to be owner occupants. So, yeah, I mean, it's just more data points, I guess, that are pointing to the same thing. So now let's go over to initial claims, guys, because this is something, as most of you know, at least those of you who know why I say cerveza sickness, those people, they'll know I've been watching this like a hawk, because sure, I think the U.S. economy is unsound, but that doesn't mean that I'm sitting here saying that we're absolutely unequivocally in a recession right now. No way. I just think that this cycle is going to play out the same as pretty much every cycle in the past. But what I always highlight is the timing component for me is the labor market. Because when you go back, whether it's GFC, whether it's .com, whether it's 1990, whatever it is, it's the stuff really hits the fan when you start to see that unemployment rate blow out, and you start to see the initial claims start to not just get to that threshold set by the Fed, which I think is interesting, you know, the 400,000, but as it really starts to ramp up and that trend goes like that, that's when you can almost guarantee that the stuff's hitting the fan. When you combine that with all the other data, the yield curves, the interest rates, everything like that. So let's shoot over to the Market Watch calendar. We had a lot of stuff come out today, a lot of data points, guys. So right here, we had initial jobless claims count 241. And 225 was expected. So let's see if they have an actual post on this. Yeah, jobless claims rise to highest level since October, but not from tariff war. New York State has big increase, which economists contribute to school halt. Oh, give me a break. Give me a break. You have to be kidding me. Oh, you know what? I forgot to tell you guys, the McDonald's story that I read this morning, they were attributing it not only to consumer weakness and that they're tapped out, they also attribute it to the weather. I'm like, oh, there you go. Good old weather. For some reason, every economist, every CEO is shocked that every single winter in the United States, it turns out that it's actually cold and you get some bad weather. Who would have thunk, right? It's the same thing right here. What? School holidays? What is that? No, well, that's a black swan that nobody could have predicted. I mean, come on. Boy, we're really grasping at straws here. School holidays. I have been doing this, guys, for 5 years now, making these types of videos. And I can honestly say I have never, ever heard that as an excuse. I've got to read this just because it's so hilarious. So initial jobless claims jumped 18,000. Okay, Labor Department said, let me guess, the Labor Department works for the government. That's like, I'll bet you it's Trump. I mean, look, Biden did this nonstop, obviously. So I don't care how much you love Trump. You don't think that he's doing the exact same thing? Come on, you would Let me put it this way. You're saying that that like Trump has a line in the sand that he's just not willing to cross. I mean, look what he did to Bezos, for heaven's sakes. Bezos was going to put a tariff charge on the Amazon thing to highlight how much of the additional price is a result of the tariffs. And Trump calls him up, says, yeah, that ain't going to happen, puts the kibosh on it. So you're telling me that Trump would morally be, now that's a line I'm just not going to cross. I mean, come on. Of course he would. Of course. Now, I'm not saying that's what's happening, but I wouldn't be surprised. Anyway, meaning that that's where they're coming up with this. Oh, it must have been the school holidays. I'm not saying that they juiced the number or anything like that, or the numbers are, the number is lower than it otherwise would be. I'm just saying this excuse is so crazy. It had to come from some politician. Anyway, let's look at this here. This boost in claims came mainly as a gain in New York, from which often sees an unusual increase during the spring around school holidays. Then why wasn't it? Then why did that not get baked into the expectations? Like, do the economists and all the experts and all the analysts, all the people on Wall Street, they're paid to give us a prediction. That's the expectation. And you're telling me that that Market Watch knows this and somehow Wall Street doesn't know that New York has high claims during spring and school holidays? I mean, come on. This is, one of the things that frustrates me the most is that they treat you like an idiot. Like, don't freaking lie to me. Like, don't treat me like an idiot. Like, I'm smart enough to see through this BS. We all are. But yet they're thinking about it like, oh, we got it. Yeah, let's just tell the hoi ploy out there. Let's just tell those dumb rubes in the real economy. The people that they just completely look down upon. Oh, let's just tell them. I mean, they'll buy anything. I mean, they're stupid. They're all idiots. Let's just tell them it has to do with the school holidays. That's what pisses me off. It's the fact that they view you as scum. The fact that they view you as subhuman, that you're just inferior to the Wall Street class or whatever class this is that is trying to pull the wool over your eyes. It's just, I mean, that's why they're central planners, right? That's, if you think about the mindset that you have to be a central planner, you basically have to be a eugenicist to a certain degree. And what I mean by that is you have to be someone that thinks you are superior. You have to be someone that thinks the average Joe and Jane is literally inferior to you, or else you wouldn't be a central planner to begin with, because you would understand that the collective wisdom of the average Joe and Jane is always, always, always going to have a higher IQ than you as an individual, Mr. Central Planner. So here's what I was really wanted to pay close attention to this initial claims, which started to trend up here, obviously, but tomorrow is going to be big too. Now, the ADP was at 62,000. I think we mentioned that on yesterday's video. Let's shoot over to that. So that was way lower than expected. Yeah, what was expected was 120,000. We got 62. So we'll have to see what non-farm does tomorrow. What's weird is I wouldn't be I wouldn't be shocked, let's say, if it did come out over the expected 133,000. Now, to be clear, that's still down 200 from 228 the month prior. But expectations for 133, that's really low, or a huge decline, obviously, of almost 100,000. But I wouldn't be surprised if it was just a little higher. Now, My base case is that it would be lower. That would be my base case. But I wouldn't just fall out of my chair if it was higher. And the reason is because bond yields went up today. Just, I mean, not huge, but slightly. They're obviously down big over the last couple weeks, but up slightly. Now, that was right at the time the ISM manufacturing came out at 10 a.m. So you see this ISM manufacturing was a beat. Now, remember that anything under 50 is still a contraction. So it's not like this was an awesome number, but it's just slightly higher. And that's right when you saw bond yields go up. And I think a big reason was because their input prices went up. And therefore, the market is perceiving that as to be possibly be higher growth and inflation expectations. So let's go over that. Let's go over that real quick here. That's the Bloomberg. So U.S. manufacturing activity shrinks by the most since November, which is accurate, but to be clear, it was exceeded expectations. So the ISM factory gauge eased 0.3 points to 48.7. The group's production index stumbled more than 4 points to 44. Readings below 50 indicate contraction. Prices paid for inputs, however, accelerated. I think that's probably why you got the bump, a little bit of bump in the yields, which I think will probably come back down. I think that's kind of a knee-jerk reaction, but we'll have to see how that plays. In fact, for me, if I was buying a long end like the TLT, that would be a buying opportunity for me. But U.S. factory activity shrinks by most in 5 months. Okay, we've got that. 11 industries expanded. Okay. Apparel, petroleum, plastics, while 6 contracted. Okay, got it. So overall, a contraction. De-staffing? What is that? Is that the new word for just firing people? Oh boy. Well, let's try to make it as rosy as possible. We're not firing people. We're not laying off employees. Duh. We're just de-staffing. Demand and production retreated as de-staffing continued. Oh, that's great. That's great. We should stop calling it the unemployment rate. We should just call it the de-staffing rate. Geez. We are truly living in communist Russia. It's just the propaganda is obnoxious. Here you go. Prices growth accelerated slightly due to tariffs. So I think that's why it's either that or a lot of times you see when the number that comes out tomorrow is unexpected, you get insider information. And the insider information, you see that play out in prices. So they'll front run. I mean, no one here is naive enough to think that on Wall Street, a lot of the trading is based on insider information. I mean, look, the non-farm payroll comes out tomorrow. They obviously already have the number for that. It's not like they're going to stay up all night tonight just crunching the numbers just to make the deadline. They've already done the math. They already know what the number is. And you don't think there's someone there at, who is it, the BLS, I believe, does the non-farm payroll? You don't think someone there at the BLS is calling up and be like, yeah, Ken Griffin, yeah, Larry Fink, number's going to be a little high. Oh, yeah. Thanks. Yeah, bye. We'll see you at Red Lobster. Of course that's what they're doing. And so then these guys just front run it. They make free money. It's insider information. I mean, it's obvious. You can see it in the price action. So that's, in my view, when you look at, let's just go to the 10-year Treasury yield so you can see what I'm talking about. And bravo to anyone who got that inside joke there about Red Lobster. You know what movie that's from, Josh? Josh isn't going to know.
I have no clue.
Happy Gilmore.
I probably saw that when I was like 7, but I can't remember.
Remember the guy that was helping out Shooter? He was always trying to screw
I
up.
do remember Shooter McGavin.
Shooter to shoot to cha. Or the guy that was always helping that crazy guy that was helping out Shooter. He was always like, let's meet at the Red Lobster. We'll meet at the Red Lobster. Okay, let's get back to the 10-year. Shooter. Dang it. That's the 30. Okay, see, this is what I'm talking about, guys. We got this downtrend and 8:30, blah, 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 and as soon as we get 10 a.m., boom, straight up. So, now that I look at the timing of it, it's definitely that ISM number. It was not, I don't think it's the fact that the ISM number beat slightly because it's still contracting. I think it's more so that they said they were seeing price pressure, and often that price pressure is absorbed or passed on to the consumer, and therefore inflation expectations increase. Now, I think there's a knee-jerk reaction. My guess would be over the next week or so, we'll come back down to where we were because people realize, wait a minute here, sure, that their input costs are going up, but that doesn't necessarily mean that the consumer can afford the higher prices. Look at McDonald's as an example. So that's actually a perfect way to look at it. Excuse me. We see that McDonald's same-store sales are decreasing. Why? Because the consumer's completely tapped out. And so let's just assume for a moment McDonald's prices, their input costs increased. Could they just pass that on to the consumer real quick? No, they couldn't because their consumers already tapped out. You see, this is what I always say, or this is my point when I always say, if nominal wages aren't going up at the same pace, you just rob Peter to pay Paul. And you can have as high input costs as you want, McDonald's. But if you try to pass that on to the consumer, you're just going to get fewer consumers. And then your revenue is really going to take a hit. So your only option is to absorb that cost, right? And not pass that on to the consumer. And then your margins shrink. And then you can only play that game so long until there's no more margin left. You see, that's why, in my mind, the way these tariffs will likely play out is you've got the basket of goods. And it is true, some prices will go up. But as some prices go up, other prices will go down, such as airline tickets, such as Airbnbs in the United States, right? So you've got some prices going up, some prices going down. So the basket of goods doesn't change much. It might go up slightly, but then you get to a point where these consumers tap out, like McDonald's, and then McDonald's has to start eating the margin. Now they keep their prices the same, and then they get to a point where their business is so bad that they have to actually decrease some of the prices, potentially like this $5 value menu, something like that, just to get people in the door so they can sell them a Coke. And then so you get this, then you get this, and this. So it's on net the same because some are going up, some are going down, might get some little inflation, but then that turns into disinflation because of the economic contraction. Okay, so we got initial claims. We figured out the ISM. Big non-farm payroll tomorrow. That comes out at 8:30 Eastern time. So set your alarm for that one. We'll be definitely talking about that tomorrow. I'm looking down at my list here. Yep, I think I got everything. Cool. All right, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism, and get your tickets to Rebel Capitalist Live. That is one thing that will not be going up. Or actually, no, I think we've got all of our price increases there. Yep, I think we've got the price increases. So yeah, that will not be going up in price, but it's only about 3 weeks away. So you're definitely going to have to get your ticket ASAP. And the good news is you can probably get a good deal on a hotel out there in Orlando, but you got to stay at our hotel. We've got a good group rate. So that'll be some deflation because you can get a lower rate at the hotel than you otherwise would have been able to get. So lower prices all the way around at Rebel Capitalist Live. You can get your tickets at rebelcapitalistlive.com. Check out all the speakers, guys. It's going to be, whoa, that's not it. I don't even have it up. But you can check out all the speakers at rebelcapitalistlive.com, all the past speakers, all the current speakers, and that's where you can get your tickets. So on that bombshell, enjoy the rest of your afternoon.